Hello, I'm Marcus Brix with the CattleFax Closing Bell, brought to you by Zoetis. Last week, the USDA World Agricultural Outlook Board released its May supply and demand estimates. The report was mostly supportive of lower corn prices in the 2014-2015 crop year. Production estimates for this time period were up 10 million bushels from last year, based on a 165.3 bushel per acre yield. Demand was reduced by 250 million bushels from last year. This pegged ending stocks at 1.72 billion bushels, more than half a billion higher than the 2013-2014 crop year. Projected old crop corn exports have been revised up to 1.9 billion bushels. To reach this export level, shipments will need to average 41 million bushels per week for the rest of the marketing year. This is higher than the 36 million bushels per week average we are currently exporting. The resulting 2014-2015 stocks-to-use ratio was 12.9%. If realized, this would mark the highest ratio since 2010. USDA's estimate for average cash price received is between $3.85 and $4.55 per bushel. World corn consumption is projected at a record 985.6 million tons. This is an annual increase of 17 million tons from higher use by China, Brazil, the EU, Mexico, and Japan. Still, global corn stocks are projected to be up 13.3 million tons, marking a 15-year high. On Monday, USDA National Agricultural Statistics Service released their weekly planting progress report. Percentage of planned corn acres planted was 59%, up from 26% the week prior. Planting progress is slower in the northern states of Minnesota, Montana, Michigan, and the Dakotas. The likelihood of an El Niño weather event is growing stronger, and with it brings greater chances of favorable growing season weather. Seasonally, corn prices are expected to peak by mid-June and decline into harvest time. The prospect of lower corn prices and high demand for replacement cattle have pressured feeder cattle futures higher. Producers should be aware of their break-even levels as we begin to look forward to managing risk in 2015. The fed cattle market was mostly $1 to $2 lower this week, with the full decline noted in the north. In the south, the bulk of the trade was at $145 per hundredweight. Sales in the north were primarily at $146 to $147.50 per hundredweight live. Sales were $234 to $236 on a dressed basis. Feeder cattle prices were steady to as much as $4 higher this week. Calf prices ranged from steady to $3 higher. Slaughter cows were steady to $2 higher as summer grilling demand moves to center stage. Boxed beef was steady on choice and modestly higher on selects this week. Corn prices worked lower as planting is proceeding quickly in the Midwest. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.